Alright, we are Team 8, and we are going to talk to you a little bit about microfinance in relations to extreme poverty around the world. Our team consists of Alex, Daniel, Isaiah, Travis, and Zach. So this first slide is going to be a bunch of statistics I'm going to go over with you guys about poverty around the world. More than half the people in the world live on less than $2.50 a day compared to American currency. 18% of the world's population lives on less than $1.25 a day. Compare that, those little gumball machines had when you were younger, it's 5 gumballs. Impoverished living is on a continuous rise, which is very sad. It is every single year consistently going up. Children and youth make up 42% of the world's population. 71 million young people are currently unemployed and not bringing in any consistent revenue. 152 million people, primarily in emerging and developing countries, live in poverty. According to UNICEF, 22,000 children every single day die because of poverty. And the majority of poverty can be traced back to lack of early colonization and technological advancements. And what we mean by that is it's in these communities where they do not have, these urban cultures like we do. They do not have this innovative technology, whether that be the business systems we use here just in the College of Business, or just a simple medical thing that could, or a hospital even, or a school that could help, reduce this 22,000 death of children every year. To continue with our problem, a common thought is that all these people do need assistance, which is very true. They do need assistance. The question is, what is the right kind of assistance that these people need? First thing that comes to mind for a lot of people is charity and donations. And yes, while charity and donations can be very useful, a lot of them act as a very temporary solution. And the question is, can these temporary solutions cause more problems? Can these solutions give somebody something that will help them for a few days or help them for a month, but then they get used to where they're at, and then they're just back to where they were before? So what we want to do is we want to make sure we can bring light to a long-term solution that can help reduce this amount of poverty around the world. Microfinance, the definition of it, is also known as microcredit, is a type of banking service that is provided to unemployed or low-income individuals or groups who otherwise have no access to financial services. And while that definition focuses very, very heavily on the financial side, microfinance can help in many different ways. It can be financial, but microfinance can also be educational. It can be a product you're giving somebody. And the goal of it is to help an impoverished individual become self-sufficient. It's not to just give them a bit of charity and hope they can just go out on their own and fix it. It's to consistently help these people and make sure they're going to be sustainable going forward. A little bit more overview is that it is primarily in developing countries. We don't see microfinance too much in a lot of our urban areas. It's usually a little bit more around banks in our urban areas, where funding the capital is very difficult. It can be attractive to both consumers and investors, and the reason for that is because the repayment rates on it is very high. Successful microfinancial transactions usually end up being extremely successful and good for both the investor and the consumer. They're usually relatively quick turnaround times because the actual investment themselves is not too high, as you're going to see here in a second. Repayment is highly likely on microfinancial loans. So there's usually very little financial risk to the investor. Statistic from about last year was first-time borrowers default 30% of the time, and repeat borrowers default 15%. If you don't know what default is, default means they're not able to pay back their microfinancial loan. And the reason, you may see 30% and see that's pretty high, but when you're talking about these loans being pretty small and the repayment rate they can have, having 70% of your microfinancial loans come out on top is a very, very successful rate. Usually a loan is anywhere from $100 to $25,000, and borrowers of higher microloans are typically scrutinized more. And what we mean by that is that if you get up to near that $25,000 loan, usually the people who are investing that money are much more involved in the process. They want to make sure that these loans are being successful. They want to make sure these people are getting the sustainable income going forward. And then obviously it gives a great image to investors. You have somebody who's investing this money and not just giving a one-time charity donation, but investing the money and wanting to help these people better their lives, and on a very consistent basis, helping them with that with a hands-on approach. It looks really great for them. Security in microfinance, this is more of the security for both the investor and for the consumer. It's much more secure when it's given to a large community rather than multiple parties. And what we mean by that is if you're going out and you're going to give this loan, or you're going to give this, product, or this, education, whatever it's going to be, to a large community, the community is much more regularly going to come around and try to help everybody and want to come together and want to make it a sustainable future. If you're giving it to multiple parties, these multiple parties may take that investment and try to benefit themselves. They may try to make it work better for them rather than the entire broad spectrum and make sure everybody is on a sustainable level. Community development is huge with microfinance. That can be anything from a school, a hospital, putting a roof over somebody's head, getting this community some kind of technology that can help them move forward in life, or it can be agriculture. It can be, donating a cow to somebody. It can be having a farm, setting up something where they can get the sustainable stuff going forward. So I'm going to talk about agriculture briefly on this little bit different side, because agriculture and microfinance is a little bit different rather than donating, money to a business or donating a school to a community or a house. The agricultural sector that they currently have, not including microfinance, primarily just involves direct government intervention right now in these impoverished communities. It's a lot of development banks, it's direct donor intervention, very soft instant rates. But the problem with that is it is extremely costly and unsustainable due to really poor repayment. When you have these people and you have these banks and they're just giving this money, a lot of times these people are taking that money and they're going to buy food. They're going to do this stuff that is going to help their family in the short run, because that's what they get this money for. They're not using this money to try to make a sustainable future for everybody, or a sustainable future for their family. And usually it doesn't have the desired effect, like I just explained. Now, microfinance in agriculture is a little bit different. It can bring new hope in life because these people are actually making sure they're getting in and helping these people have this sustainable future. It's not just, giving them a little bit of money and hoping that they go and do something different. It's actually going in, helping them start a farm. It's giving them, some cows if they want to, have milk. It's much more broad. It can be difficult, usually because it has higher cost, risk, and lower profit, because when you're talking about these extremely impoverished communities, if you're helping somebody how to get a farm, a lot of times this food is going to have to go back into the community, and a lot of it isn't going to be sold. But it's a much bigger spectrum than that. And usually when you're getting into microfinance, you're not looking for a massive profit. You want to make sure that these people have a sustainable future. And that is why it can require a much more hands-on approach, is because you're wanting to actually help these people. You want to make sure they're getting what they need. And now I will pass it on to Isaiah.
All right, so I'm going to talk about some of the drawbacks to microfinance. For starters, in these microloan situations, you're always going to be at risk for lender greed. We've all have heard of like a loan shark. These borrowers, they don't have a lot of options. They don't have a traditional bank to go through, so they're at risk that the lender's going to take advantage of them. In the past, it's been shown that banks have charged upwards of 200%, and borrowers aren't aware of the terms and conditions of the loan, and therefore they can be accumulating a lot of debt and not even being aware they're doing so. A solution to this is that we can implement laws and regulations similar that we have here in the United States that protect borrowers from getting taken advantage of. Another disadvantage to microfinance is that some people argue it doesn't combat poverty at all. Sometimes people will invest in these businesses and it won't increase sales or help the business out in any way. And if this happens, the borrower's not gaining anything, the lender's not really gaining that much, the consumer isn't seeing better prices, and it's not helping out the community at all, so it's not doing any good. Solution to this is that we want these microfinance companies to do market research in the areas that they're investing, ensure that they're investing in good companies that are going to succeed and are going to show economic growth for their communities. Studies show that 90% of microloans aren't used entirely for the business. A lot of times individuals will buy household commodities or personal items, and this isn't really what we want seeing our microloans doing. This just leads to people that are already poor kind of get into this vicious cycle of increasing debt, and the other people involved, the community, they're not seeing the economic gains from increased business. A solution to this is that if a lender wanted to lend to a borrower who maybe was at risk for not using the money in the right way, they could just give them the actual hard assets, so that way they're ensuring that the money is being used for the business. So next I'm going to talk about the impact that microfinance programs have made. If it's done correctly, it does lead to economic gains, and this increases the health and nutrition of the communities that it's in. It also allows these people who are in poverty, who are maybe spending all the money that they're making just to get by, now are able to accumulate wealth and increase their level of spending and level of consumption and standard of living. Microfinance programs also help create more jobs and higher paying jobs. 2.5 million people around the world who had zero credit now have access to microloans. Many of these people are women. A lot of these microloan programs will invest in women because studies show that they're more likely to put that money back into their communities or back into their family to help improve their standard of living. Microloan programs have also helped out the extreme poor. Same idea of these communities just being in this cycle of poverty and help breaking that cycle. Microfinance programs also help businesses meet social needs. So a woman named Jacqueline Novogratz invested in a company that makes malaria nets. The company is completely run by women. Her investment increased the amount of employment, it reduced the cost to consumer, and ultimately stopped the spread of disease. So last thing I'll talk about here is our call to action. If you guys choose to invest some of your money to combat poverty, we suggest that you consider doing it in the form of a loan rather than a donation. Loan we see as a more sustainable solution to poverty. And then secondly, we ask that you guys do your research and make sure that you're investing in good companies that are doing their market research and ensuring that these loans are being used in the right way and are actually helping out the borrowers that are getting them. That's all we have for you guys. Thank you so much for your time.